We are currently facing economically challenging times. Being able to find enough money to feed a family is incredibly difficult. We live in an era where everything is becoming more expensive, and the value of money is no longer able to keep up with these rising costs. As such, we look for ways to make life a bit more breathable financially. Thus, in this video, I'll teach you about how much you need to invest in order to live off using dividend income. Hello and welcome to Investor Facts, where we address all of your investment needs and questions. Stick around till the end of the video to learn more about investing and to be one step closer to the financial freedom you've always wanted. There is, in my opinion, no more excellent choice than being able to live off dividends when it comes to living off passive income. The ability to live off the dividend payments of your investments is the only passive income that requires a little work to sustain as others, although there are other forms of passive income as well. With dividend investing, dividends are automatically deposited monthly or every 3 months into your brokerage or bank account. Besides monitoring your portfolio once a month, it's the easiest method to make a living without having to do anything. Even if you couldn't rely on dividend income, it could mean the difference between staying in a job you detest and switching to the one you like. Alternatively, it may mean the difference between working full-time and part-time while enjoying your free time with loved ones and friends. Today's lesson will examine several investment categories and determine how much cash we'll need to live off dividends. For example, we'll suppose that you want to make $4,000 each month, which, depending on your circumstances, may or may not be a lot. You will require much more than this if you have 4 children and reside in Los Angeles. However, if you live in rural area of Tennessee and are willing to lead frugal lifestyle, you can get by with far less each month. When determining when you can retire from dividends, these videos and articles employ investments with the potential for rational dividend growth. We'll utilize the Johnson & Johnson ticker symbol J&J, perhaps one of the most well-known dividend stocks according to Seeking Alpha. Johnson & Johnson traded $172.93 per share. It presently yields 2.45% and distributes at $1.06 per share quarterly dividend. We must divide $12,000 by $1.06 to get $11,320 if we wish to receive $4,000 a month or $12,000 a quarter. We must own this quantity of J&J shares to earn $4,000 each month. To live off dividends today, we would need to pay $1,957,567.06 if we purchase 11,320 shares for $172.93. You won't need to invest $1.95 million. Instead, you will only need to continue making sizable monthly investment and wait 20 or 30 years for it to grow before you have a comfortable nest egg to live on. While that's great, this investing strategy has few drawbacks. The worst aspect of it, first and foremost, is waiting. Johnson & Johnson yields only 2.45%. So even if a stock can raise its dividend every year for decades, it will be long before you own enough shares to live off dividends. Many folks give up around that time because they become demotivated. After all, the procedure is instead drawn out. Getting there typically takes the majority of your working years. Therefore, the next logical step would be to consider investing in higher yielding types of assets. If it's going to take a considerably more protracted amount of time to save up money in Johnson & Johnson type equities. Let's examine another popular stock, Realty Income, a stocker ticker O. This corporation is an REIT, which is an organization that owns properties that generates revenue and is mandated by law to distribute 90% of its profits as dividends to shareholders. Its current yield of 3.95% is higher than that of most consumer staples, such as Coca-Cola or Procter & Gamble. The fact that it pays a monthly dividend as opposed to quarterly dividend is advantageous. Realty income currently pays 23.55 cents per share per month, which will assist with our calculations. Realty income is frequently regarded as one of the safest REITs out there since, according to its website, it has increased its dividend to 95 consecutive quarters. Again, we'll take $4,000 and divide it by 0.2355, which is the current monthly dividend, to receive $4,000 each month. When we did so, we discovered that to earn $4,000 a month from realty income, we must own 16,985 shares of the company. $1,215,276.75 is obtained by multiplying 16,985 by 71.55 cents. This sum of money is still substantial, although it's not as awful as Johnson & Johnson's $1.95 million. This is still out of reach for most people, or at the absolute least, swiftly. It will still take most people a long time to own enough shares of realty income to live off, even with monthly dividends that will facilitate faster compounding. So let's move on to the different stock and focus on high dividend yield. American firm Altria, with the ticker code MO, produces and distributes alcohol, tobacco, vape goods, and cigarettes. It currently pays a quarterly dividend yield of 7.27%, and as of the time this video was made, it was paying 90 cents per share. You'll need to acquire roughly 13,334 shares of Altria at the company's current share price of $49.53 to make $4,000 each month, or $12,000 per quarter. This would cost you a total of $660,433.02. Now, a lot more people can afford to pay this sum. Many people, provided they begin early enough in life, might eventually earn $4,000 per month in passive income if they remain committed, continued investing in stock, and resolved to reinvest those dividends. But here's a self-evident question that needs to be asked, and that is whether it is wise to make such significant investments while depending solely on one stock to support our lifestyle. The reply is negative. I would never advise spending $500,000 on a single business and relying only on the business for your livelihood. To avoid having one of their holdings reduce a dividend, income investors must diversify their portfolios. Your dividend income and, consequently, your way of life could be severely impacted if Altria ever decided to cut its payout. It makes sense to invest in various businesses because this happened recently with AT&T. Still, the problem is that there aren't many stocks of companies with dividend yields comparable to Altria's. While certain master limited partnerships and business development companies offer significant dividends, these investments are much riskier. What exactly can people invest in that produces extraordinarily high and frequently still increasing dividends is the question. Covered call ETFs are what I think to make for an attractive investment for folks wishing to live off dividends sooner because they provide outstanding dividend yields, growing distributions, and monthly payouts. Though they haven't been around for very long, these more recent types of investments are becoming increasingly popular. They employ a covered call investment strategy, in which the fund purchases a basket of stocks and then sell call options correlated to that basket of stocks. If you are inexperienced with options, this can be challenging to understand. The option premiums from these monthly sales are distributed to investors as dividends. And as investors, we receive large dividend yields. The most well-known covered call ETFs is QYLD, which has dividend yield of 11.80%. There are two more widely used covered call exchange trade funds or ETFs. One of them, JEPI, uses covered calls and keep equity-linked notes for stability. NUSI is another option. It uses covered calls and protective puts It assists in preventing a significant decline in the fund during a challenging market. As you can see, QYLD offers higher dividend yields than JEPI and NUSI. These two have far better long-term price appreciation in exchange though. As you can see, QYLD has fared the worst of the three in share price performance. However, QYLD still provides a greater dividend yield. This graph displays the result of a $100,000 investment in QYLD 5 years ago. This portfolio outperformed Johnson & Johnson over the past 5 years when dividends were reinvested. So let's calculate the amount of money we will need to invest to earn $4,000 annually. First, we'll use NUSI. 21,447 shares result from dividing $4,000 from this fund's most recent monthly dividend, which was $0.1865. This is better than Ultra if we multiply by $28.73. Remember that this isn't an ETF with a diverse portfolio and it's not just one firm. Lastly, let's employ QYLD. We obtained 21,287 shares when we divided $4,000 by its most recent dividend, which was $0.1879. To live off $4,000 per month in dividends, we would need $490,239.61 if we multiplied this by the share price at the time of writing, which is at $23.03. Also remember that you are not required to invest the entire sum. If you reinvest those monthly dividends, you will need to invest less than this and let the snowball effect work its magic. You would only require $245,119.81 if you get by on $2,000 a month, have Social Security, retirement funds, or some other types of passive income. Compared to current Johnson & Johnson type stocks, this sounds far more doable. Thank you very much for watching. What do you think? Are you up to the task? Do you have enough money in your bank account to live using dividends? Let me know your thoughts in the comments below. Once again, this is Investor Facts, ensuring that all your questions are answered. If you enjoy watching the video, kindly leave a like and subscribe. Until the next time, cheers!